New at 5:30. The credit crunch continues tonight as even more foreclosures are announced. The country's top economic policymakers are taking action to get the country through the credit crisis. And while more borrowers lose their homes, more people working for lenders are losing their jobs. How these cutbacks in the mortgage industry could affect the market.
KRON 4's Maureen Kelly has tonight's top story at 5:30.
It's always a shock when you get the axe.
Neil Heller is one of the few hundred Greenpoint Mortgage employees who will be packing his bag when this Novato branch shuts down. The parent company, Capital One Financial, is shutting down the entire Greenpoint Mortgage unit, which means 1,900 people will be looking for work elsewhere. And America's biggest mortgage lender, Countrywide Financial, has also announced that they will be cutting 500 employees from their subprime lending unit. There are those in the industry who saw this as an inevitable shakeout.
There's just too many people in the business.
Mortgage broker Mike Miller says new mortgage brokers and lenders flooded the industry after 9/11/2001. That's when the Federal Reserve artificially lowered interest rates to stimulate the economy. It was a boon to people wanting to get into the real estate market, but not everyone who got in should have.
There was a lot of loans that were done that probably should not have been done.
And now a growing number of those loans are going bad, creating a backlash in the mortgage industry. Lenders are tightening their credit standards, which is making it tougher for people to borrow money. One industry analyst has said that this alone will cut demand for new homes by 35% over the next year. This pullback of lending greenbacks also means less work for the people who put those loans together. But Mike says there is still money out there for qualified borrowers.
And there will be less players in the game. There's going to be less lenders at the end of the day, but those that remain are going to be the strong ones.
And while rates have edged up, he says they haven't gone up so far to chase people out of the market. But for some people, it will be enough to change the amount of the money they're willing to spend. Maureen Kelly, KRON 4 News.
And what about these numbers? The number of homes in foreclosure, that number continues to rise. A new report out today shows foreclosures across the country up 93% from last year. California had nearly 40,000 foreclosure filings just in July, the most of any state. That's one foreclosure for every 333 households.
Senate Banking Committee Chairman Christopher Dodd is urging the Federal Reserve to use all the tools available, as he puts it, to keep the credit crisis from undermining the national economy.
I urge the administration here to continue doing everything necessary to see to it that people can keep their homes. We may have as many as 1 million to 3 million people who could lose their homes, not because they lost their jobs, not because the economy collapsed, but because they got bad deals on mortgages.
Dodd says that he welcomed the Fed's steps so far, anyway, to deal with the credit problems. The Fed last week sliced its discount rate to banks. It's been pumping billions of dollars into the financial system.